Hey guys, it's Jen Burns with EXP Realty. Thank you so much for coming back to our channel. I hope you guys enjoy all the content that we're posting. If you do enjoy it, please subscribe to the channel. Make sure you hit the bell to get notified when we have new videos come on. I got with my friend Doug Bickley with GMFS, and we talked about a ton of different things. We talked about how the coronavirus is affecting mortgage rates. What about if you lost your job or you reduced hours? What about your payment? Forbearance. What is forbearance and kind of how that is different for everybody? We also talked about just interest rates. What's going on with interest rates, refinancing, all kind of different things that we feel like the public would want to know more information about. So stay tuned for the video. And make sure you watch it till the end, because I'm going to tell you about the best types of buyers in the market right now. So if you're thinking about buying, make sure you stay to the end so we can kind of tell you if you're one of those people. Hey, I'm Jen Burns with EXP Realty, and I'm here with one of my best buds, Doug Bickley with GMFS.
Yep, and the Bickley team.
And the Bickley team, they're awesome. And we wanted to make an updated video about where we're at in the corona crisis. Let's talk about the economy. And you know, a lot of people the employment rate is going up. A lot of people are not gonna. I think we're gonna see a big shift next week when we flip over to April. And some people are gonna need to make their mortgage payments or rent payments, and they may have lost their job 3 weeks ago and may not be able to do that. So what are y'all doing, if anything? What can the consumer kind of look into that could be some help in that situation?
Yeah, good question. So what we do offer is, and thankfully we've navigated this a little bit with the flood. No, wasn't near to this level that we're at today, but the flood impacted us locally here very hard. So we do have some experience with that. So what we offer is the forbearance, right? So the forbearance, everybody has that question, like, what is the forbearance? Sometimes I don't really even understand the forbearance, but it's not a forgiveness of those payments, right? It's a postponement of those payments. It works in 3-month increments, right? So it's 90 days, which would be 3 payments, okay?
So, and you may not know the answer to this, I'm not trying to put you on the spot, but is that like postponement for 3 months and then that gets tacked on to the end of your loan?
Yeah.
Or is it all going to be due in 90 days?
Great question. So I can't answer that 100% accurately.
Okay.
Because it depends on which type of loan you have.
Okay.
Right. So it's not a GMFS program or product. We help make the decision that it's okay to do it, right, on our servicing side, but it's not something that we roll the rules out. It's a Fannie Mae, a Freddie Mac, or a HUD rule. Okay. So based upon whichever type of loan you have is going to be based upon what the forbearance proceedings or rules are. I can tell you guys, if anybody listening has a GMFS loan and that's something that they need to do and they are considering, they can call me. I can give you the phone number to call. You do have to go through the forbearance process directly through our servicer, SLS, but I can give you the number to contact them directly. And then I also have basically like a little worksheet, like a flyer that kind of takes you the step-by-step process of what a forbearance is and what it does. I know in a lot of instances what it is, and this is an example. I'm not saying it's necessarily going to be your scenario, but what it is you just get those 3 months payments, and then you kind of work out a plan to catch those up.
Okay.
I've seen them where here's the lump sum, you owe $3,000, no interest or anything on it, but you owe $3,000, or here we go, this $3,000. What we're going to do is spread that over 12 months. I've seen those done.
Okay.
So I think there's several different options and ways it can work out there, but I don't want to tell anybody exactly what their option is.
Yeah, so if they're outside playing with their kids and we're all in quarantine and your neighbor comes up to you and says, I got forbearance for 3 months and this is what I did, and then you call your mortgage company, you can't get that. Like, not everybody is the same, right?
Yeah.
So it's like, don't count on just because your neighbor got something that you're going to
have a different loan. Yeah, but I think it's definitely, if you're going to have a little bit of an income strain, like I think it's definitely worth making the call just to see.
Just to find out. When everything started, everybody was saying, I think the first thing we saw was what the interest rates just kind of tanked.
Yeah.
And then everyone was like, oh, refi.
Yeah.
This is awesome. And then things started doing a roller coaster kind of thing. So where are we?
Yeah, great question. So, first of all, I'll say as a company, GMFS has done an amazing job. Very, very proud to be a part of those guys and work with them. So as far as the navigation of the mortgage process goes, we're still in good shape. Now things take a little bit longer, obviously remote, even though I feel like we're kind of in the same place that we were when you and I spoke. What was that? 2 weeks ago?
Yeah.
A week ago, right? So a week ago, maybe Wednesday, maybe a week ago from yesterday, I can remember getting to the office that morning and the 30-year mortgage was at 3.25, right? Unbelievable, right?
Yeah.
Really cheap money. And maybe by the time the market was about to close around the 3:30 or 4 o'clock, I think the rate was 5.25%. Which I've never seen that happen in my whole
3.25 in the morning
to almost 5%.
5%
Almost
in
5%.
action.
Yeah. The next couple of days kind of went up and down, didn't really get back in the threes. Since then, it seems that we've stayed more consistently in the threes, anywhere between, it's still been as good as 3.25 and, up as high as 4-ish, somewhere around the 4% range. Which I feel like we're kind of going to stay in that area, and I think there may even be a little, from the things I hear, some room for growth, even with interest rates continuing to go down.
Okay. So what does that mean for buyers?
Well, I think it's a great time to buy.
Yeah.
I always think it's a good time to buy, though, right? I think it's a great time to do both. Let me just kind of back you up to maybe where we've been since the shutdown, right? We've probably taken somewhere around, in the last 4 days, somewhere around 20 to 30 mortgage applications, which with, I would say, half of those being purchases. So it tells me that buyers still want to buy. So it tells me that people aren't really, I don't want to say not fearful or not educated on really what's going on. I think people are looking to capitalize on how cheap the money is out there and how low the interest rates are. And I think, at the end of the day, we want to buy a home and we want to have a lower payment. And as long as the rates are down low like this, you're going to have a lower payment. And I think people realize that. Something good that's good to educate your client on if they're doing that and signing that contingent offer is at GMFS, which I'm sure other companies are doing the same. So we have it costs different amounts of money to increase your rate lock, from 30 days to 45 days to 60 days. So we have decreased what the cost is to do that for the consumer, so we can lock in for 45 and 60 days, and in some cases even 90 days. Okay, there is a little sacrifice there in interest rate when you get to that 60 and 90 day range, but really the 90 day, 45 and 60 is still very, very good. It is. It's worth it. Very worth it. And then in that way, the contingent person can lock that rate and feel pretty good about that, and maybe make a decision down the road if they want to move forward.
Right.
Okay. When they know it gets closer, so they don't lose the house, or maybe their house goes under contract, but it's going to close a month after they're supposed to close. And then also they're protected if the interest rates go down over that 30 or 60 day period they're locked. We can float them down, which is no additional cost to the customer.
Oh, that's great. That's a great.
So it is a good tool.
That is a great tool, and that's a question I get a lot about, like during this time when the rates are going like this. Hey, I locked in at this. Like, how can you float me down?
Yeah.
So what's that?
Yeah. So really, when the market, the market moves all the time, and we're not, constantly watching what it's doing all the time, right?
Mm-hmm.
But we're very aware of it. So if we have your rate locked at 3.5% and the market makes a big dip, and you call me up and say, hey, the market made a dip, what's our interest rate look like today? I can easily, within 15 to 20 minutes, just kind of run everything and see, yeah, it looks like we can float you down to 3.375, or it didn't quite dip enough to float you down, so let's just kind of sit tight where we are.
Very cool.
It's a very easy process to look at it and do it.
All right, one last question
Okay.
for you. Okay, refinances. So, you know, sometimes I think like during the regular market, we have the benefit because we can work with buyers and sellers, and y'all can only work with buyers, right? Like if you have a seller, you're just kind of waiting on us. But on the refi side, when the rates go down, that's a whole nother source of business for y'all, for all your past clients and the relationships that you built with those people. So that's a question that I get all the time on, should I refi, should I refi? So I've always been told it's about a 1% difference in what you have to what the rates are now. So can you explain all of that?
Yeah. So I think that's good. That's a good rule of thumb to have, 1%. You know, I tell everybody that calls and asks about the refinance that we're more interested in making sure we're setting you up the right way than we are just refinancing you to refinance you. So there's a couple of different scenarios. 1% is a great rule of thumb to go by. So if you're on a regular conventional mortgage and you want to keep the same term that you're on, it can drop your rate by 1%. It's gonna help you a pretty good bit, keep money in your pocket.
What does that look like? Like money-wise, ballpark, we're not putting you
I
on
know.
the
What
spot.
did we figure out? Was it like $140 or $50 when it was on $225,000 loan? So maybe $150 per month, which is real money. I mean,
and if they get rid of the PMI, that's like huge.
So I think you're on to something there. So that's when it's a case by case
basis.
I do think it's a case by case, which I always encourage everybody. Fill out the application. Let us send you a link. Fill out the application. It's free for us to check for you. And let's see if you have PMI. We might be able to figure out a way to get you out of your PMI, or you might not be required to have PMI anymore. There's a lot of different, little things, whether it's buying you out of PMI, whether, you can bring that money to closing or financing. And there's a lot of little things we could look at there.
Yeah, I think a lot of people think the only way to get out of PMI is to put 20% down, and that's just not.
It's not true.
It's not true.
It's not true.
Yeah. So if you've been trying to save money and trying to save that 20% because you hate debt, and you don't want to have that extra PMI in your payment, they need to talk to you, but because there's 2 or 3 other ways to get out of that.
Yeah, and houses have continued to drastically increase
in value.
So somebody that bought 2 years ago, they would probably be surprised what their house might be worth today.
Yeah, probably 6 to 10% more.
Right, which is pretty amazing.
Yeah, so we get that appraisal and what they paid down on the mortgage and put down.
So it's worth taking a look. The rates are so low now. If you were going to look, now is the time to look. It's quick. It takes about 30 or 40 minutes for us to look at it and really kind of run through and tell you after you've done the application. It's easy.
And let's just talk about that application for just a second.
It's a pretty easy process. It's probably 5 to 8 minutes, just depending upon how many details you want to put in there. We do not need the application to be overly detailed, because we're going to go through that with you after and ask you some questions. And then once you hit the submit button, we get an email and an alert that you get it. We can run your credit from there, and we can let you know something whenever you're ready for us to let you know something in 30, 45 minutes, or if you wanted to wait till that afternoon, we can definitely do it that afternoon.
Okay, so how do they get in touch with you if they want to talk about a refi or a forbearance? Like, can you give them your information?
Yeah. So if anybody has any questions about the forbearance, call my cell phone, 225-936-5243. And I'll answer any questions I can for you. I'll send you the worksheet that we have that you can look at. And then if your mortgage is with GMFS, I'll also send you the servicer's phone number. And if you need help with refinancing or wanting to have any questions or anything that just want to know what ballpark, what rates are, you can call me, you can email me, text me, whatever works best for you. Yeah.
And one thing I wanted to add, it's not really with refinancing, but it kind of goes in the same category with payments, is that, I tend to see when I meet with people, no matter if they're buying a $200,000 house or an $800,000 house, they really want that house that's like $50,000 to $100,000 more than they can really want to spend.
Who doesn't?
It doesn't matter if you're at 600, you always want that 800. If you're 800, you want that million. If you're 200, you're like, man, if I could just do 250.
Sure.
So with these interest rates being so low, this is your time to
That's a good point.
stretch your budget. If to that 250 range, that 300 range, and still have that lower payment that you're
Yeah, that's a good
wanting.
point.
So
That is a good point.
if you've kind of been on the fence about that, that's one huge factor, the interest rate, that's going to help you maybe get that dream home that you've been waiting for, but you
Yeah.
just haven't pulled the trigger yet. So
Yeah.
Doug, thank you for today, and we're so dorky. Thank you for answering all these questions.
Yeah, thanks for having us.
And what's your cell phone number one more time?
225-936-5243.
And mine is 225-907-3305. If you have any real estate questions, buying, selling, please give me a call, and we'd love to help you out. Thanks.
Thanks.
Okay, guys, well, thank you for watching the video. I promised you in the beginning that I would talk to you kind of about the best kind of buyers in our market right now. If you are someone in an industry where your job is pretty stable, healthcare industry, teachers, anything like that, if that you're not at risk of reduced hours or being furloughed for a couple weeks, you guys are extremely rare and strong buyers right now. So this would actually be a really good time for you to buy. Our cash buyers are really good. People that have a very, very strong credit score, the mortgage companies are really loving those types of buyers right now. So if you are a strong buyer, this is some time that you could probably be a little bit of a bully in the market. What I mean is, if there is a seller that is very, very motivated, and we've seen a rapid decline in the amount of showings that we're having. Everybody's trying to adhere to the stay-at-home order, but there are some instances where people just need a house. So if you are one of these buyers and we have a extremely motivated seller, this is a very good time for you to make an offer, because you could probably get a little bit better of a deal right now than you could have a month or two ago. So again, thanks for visiting the channel. Hope you got some good information, and I will see you next time.